Hi, I'm Sandy Botkin, CPA, tax attorney, and former trainer of IRS attorneys nationwide. And we're going to be talking about why you'd be brain dead not to have a legitimate home-based business. You know, what's interesting is that we have two tax systems in this country. And when I say that, most people think, sure, one for the rich, one for the poor. And I bet you thought that. Nope. You're close, though. There's one to make you poor, and there's one to make you rich. The one to make you poor is designed for employees, for the working stiffs, because they're taxed on $1, and they really don't get a lot of deductions. But if you are self-employed, you get everything that an employee gets, and you can write off part of your house, your spouse, the equivalent of your kids' education and weddings. I'm not exaggerating when I say that. You can set up a pension that I promise you makes any government pension look small by comparison. You can set up a home office, which is worth thousands. And I'm going to say something that's going to sound funny, but the government is the biggest bookie in North America. Why? Because they want to subsidize you while you're building your business so that you can pay them for the rest of your life. And the way they do that is that they will subsidize your losses. If you have a loss, you can use that against any form of income you have. Interest, dividends, wages, pensions, anything. So let's take an example. Let's say you make $50,000 at a job. You have a home-based business that just generated a $10,000 loss. You only pay taxes on $40,000, the net. Let's say you're a single parent and the loss exceeds your whole income for the year. You can carry back all business losses 2 years and get a refund from the federal and state government for the last 2 years of taxes that you paid. You actually get a check. Canadians can carry back their losses 3 years. They get a little bit of better benefit. Or you can carry forward all business losses up to 20 years and offset the next 20 years of earnings. You never lose a properly documented business deduction as long as you're running your business like a business. So having a side business is really critical in making your life a lot less taxing. Hi, I'm Sandy Botkin, CPA attorney and former trainer of IRS attorneys nationwide. And we're going to discuss why it's so important to lower your taxes. Because I don't think people realize how much they're paying and how significant it can be to lower your taxes by even a couple of $1,000s. You know, many of you may have heard Susie Orman, who's very famous. And she's very famous for saying, oh, debt's the #1 expense, and you should lower your debt. And as famous as she is, she's wrong. The #1 expense in this country is taxes. It exceeds what you pay for food, clothing, lodging, and transportation combined. Shocking, isn't it? So if 30% goes out in taxes on the average, and as I said, it could be as high as 45%, and 20% goes out in debt, and that's on the conservative side, well, that leaves you 50% for everything else. Everything else includes things like retirement for you, education for your family and for your kids, medical, dental, repairs, insurance, food. If you wonder why you can't get ahead, because you have to live on roughly 50% of what you're making. But let me give you another example of how important tax planning is. You know, there was a study done by an individual, and he asked himself a very interesting question. If I start off with $1 of equity, and my money doubles every year so I don't have to pay taxes, how long would it take for that $1 to be worth $1 million? So, for example, if you start off with $1, at the end of 1 year, it's worth $2. $2 at the end of 2 years is worth $4. Well, if you run the numbers, it actually takes 20 years, but at the end of 20 years, it's worth actually $1,048,000, believe it or not. Now watch this. Same dollar doubling, same 20 years, but we're going to assume you pay 35% in taxes on each year's gain. And when you consider federal tax, state tax, Social Security, Medicare, excise tax, sales tax, hotel tax, and many of the other taxes, state taxes, at 35% is not that high. So we're going to assume 35%. So a dollar doubled is not $2, it's really $1.65. Same 20 years, take a guess how much it's worth. I bet you won't guess. The answer, $22,370. Why? Why is there such a difference? The answer is compounding. You lose the interest on the money. Albert Einstein is attributed with saying that compound interest is the 8th wonder of the world. It can work for you by getting your taxes down to the legal minimum. It can work against you by overpaying your taxes. I want to emphasize something right up front. The rich know something that most people don't know. They have a secret. And the secret is that we have two tax systems in the United States. Now, when I say that, most people think that there's one for the rich and one for the poor. That's not quite true. There's one to make you rich, and then there's one to make you poor. There's one for employees, which is designed to take your wealth and make you poor, because you are taxed on $1. And then there's one for self-employed individuals, which is designed to create economic growth. And the reason for that is that small business generates over 70% of the job growth in North America. It is not IBM, it's not Microsoft or American Airlines, it's small business. So Congress passes good tax laws for small business. In fact, the important point is that small business get to take deductions first before they pay any taxes, unlike employees who have to pay taxes on $1. You can save big money by taking advantage of these good tax laws. And these laws are available to you in business, whether it's in full-time in business or part-time or just in your spare time. It doesn't matter as long as you run your business with an honest expectation of profit, which means you're really trying to make money. In fact, if you know what you're doing in a small business, you have the potential to write off part of your house, your spouse, the equivalent of your kids' education and weddings. I'm not kidding when I say that, by the way. You can set up a pension plan that makes any government plan seem paltry by comparison. The potential is just enormous. Good proof of this was illustrated by a lady named Jane Bryan Quinn. Jane Bryan Quinn is a nationally syndicated economist. You may have heard of her. She is a nationally known commentator on personal finance, with books and columns read and trusted by millions. She did a study of a couple who made $40,000 a year. And $40,000 didn't go that far. So the husband said to the wife, honey, you got to go out and get a job, which he did, and she made an extra $20,000. Now they're looking at their bank account, and they see no difference at the end of the year. I mean, she's making $20,000 more than she made the year before. What's going on? Did you ever hear that you have to have two incomes to make it in this country? Do you know why? You're about to get a 6-month financial planning course in the next few minutes. Follow along as I show you why the extra job was the wrong decision. The following example is based on 2009 tax rates. On that $20,000, they have to pay $4,845 in new federal and state taxes. Most of that was non-deductible. They have to pay Social Security of 7.65%. On $20,000, that's $1,530 of Social Security, which is non-deductible. We assume that they drove 10 miles a day round trip. And that's probably pretty conservative, I think. But let's go with that. 10 miles a day round trip, 5 days a week, 52 weeks a year at IRS's current 55-cent a mile rate. That's $1,430 of commuting, which is non-deductible. We assume lunch is at work, and we assume that they spent $7 a day, 5 days a week, 50 weeks a year. That's $1,750 of lunches, which is non-deductible. We assume that you have to have clothing, better clothing, in fact, if you're working, more upkeep, because now you're working, you're going to have more dry cleaning, and that's gone up by at least $1,200 over not working. And finally, with both spouses working, you think they want to cook? Heck no! They want to eat out, where their food costs have gone up by at least $2,000. And what about childcare? I bet you they spend at least $125 a week in our example. And I'm not sure we can get childcare for 3 kids for $125. But $125 a week, 50 weeks a year, is $6,250 in childcare. Most of that is non-deductible. In fact, all you get is a little bit of a credit on that. Out of the $20,000 that they've earned from the part-time job, they are only left with a staggering $995 a year. They're putting in tons of hours working, they're putting up with a commute, and they're putting up with a boss that is spelled backwards double S-O-B. You know, I know it sounds funny, but it really isn't. And people are working 2 jobs, 3 jobs, and nobody is able to watch the kids. So what's the answer? The answer is to take advantage of the greatest tax write-offs available in America. And that is by having a home-based business and working that business like a business. Nothing can be better than that. Because if you know what you're doing, You can write off, as I mentioned, part of your house, your spouse, the equivalent of your kids' education and weddings. You can set up a pension plan that makes any government plan seem paltry by comparison, and there's much more than just the tax benefits. For example, you get tremendous time freedom. You can work out of your home. You dictate your own hours, and you can make unlimited income. And that's probably the most important factor for having a home-based business. There is no glass ceiling of any type. Having a home-based business is probably the smartest thing that anyone can do. And what amazes me is that people will work overtime to try to get ahead in a company, when frankly they should be putting in as little time as possible to avoid getting fired and getting a part-time home-based business going. Who knows? Maybe that business will generate enough money where you can quit your job altogether. Wouldn't that be nice? That's the point. Having a home-based business will generate enormous benefits for yourself and your family. It's something you should really consider, and it will make your life a lot less taxing. I would strongly encourage you to carefully evaluate and get started with your own home-based business today. The tax benefits are incredible. And that's one very important point, is that once you learn some tax planning, you get even one idea in taxes. It's good this year, it's good next year, it's good the year after that. Tax planning is the best residual form of income in the world because it's basically guaranteed. And that will make your life a lot less taxing.